Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Lots to go over this week. Huge week for earnings. We got Tesla and Alphabet reporting tomorrow after the bell. Lots of companies throughout the course of the week, especially even the mega cap techs next week as well. So it is going to be jam-packed with big volatile moves in individual stocks. We also have this Friday the PCE data, which is the inflation gauge that the Federal Reserve prefers. So what do we have here? Well, this morning we have the S&P futures trading higher, a little bit of a mega cap bounce after the debacle over the last week or so in those stocks. Let's get right into it and take a look. All right. Here we have the S&P 500. This is the pre-market data. You can see again, if we go all the way over here, this is where we closed on Friday, right there. So you can see that after hours on Friday, it was a whole lot of nothing. Then we opened at 4 in the morning for the SPY trading, and we actually moved up beautifully. And again, we are pulling back just a shade here. But for the most part, if you look at that trend to the upside, it's been a consistent grind higher. Now remember, the mega cap tech stocks have gotten trounced over the last week and a half. In fact, I think over the last week and a half or so, $1.1 trillion evaporating from those names. So in all fairness, they're kind of due for a bounce. You talk about technical levels. I'll show you some in just a minute that kind of guided us to this. But what I think is important that a lot of these big tech stocks, they broke upsloping trend channels. And what that tells me is that bounces are now shortable when they bounce into resistance. So it's not about making new all-time highs. As a technician, you now look to short the rips. And I'm going to show you some good charts on that. In fact, let's get right into that action. So the first thing is let's flip over to the daily SPY chart. And this is a really interesting chart because it kind of alerts us that it was important to expect maybe a relief on Monday today for a bounce. So what we can clearly see on this chart is a channel. And what I love about this channel, it's one of my favorite channels on any chart, is that we can see that if we zoom out enough and we go all the way back here, it connects all the way through the low of 2023. Notice again, the highs of the channel all along here, the trend or the market, the S&P keeps hitting and getting rejected. The low end right here, here, and now here, this was Friday's candle close, we came right into that. So what does that imply? Again, just use logic. Shut off the brain, the fear, the greed, whatever it may be. You have to just say, okay, well, if every time we hit here, we get a bounce, we hit here, we got a bounce, we hit here, get a bounce, well, what do you expect here? Well, you expect some sort of bounce. All right. In addition, what I love showing people about this channel is that it's interchangeable. And that really solidifies how important a channel it is. So what I'm going to do here on the charts is if we take the channel and we take the low end and we just drag it up, we can see that it coexists perfectly with these highs, right? So you have all along here, these highs right along here, all along here as well. So you can flip it from here down to here or from here, back and forth, and it aligns. And what that tells me as a technician is that this is something that is important. When the market on two different angles is following the channel perfectly, it tells me to be aware that this is major. Now, how do I treat it? Well, number one, I treat it as a major channel of support. So you expect the bounce. But what we know about upsloping channels, and again, if we just draw a general channel like this, is that upsloping channels can stay within those channels for a while, but 7 out of 10 times, they eventually break to the downside. You don't know when. That's the tricky thing, right? That's where you start looking for time counts, you start looking for topping tails, you start looking for other signals that can give you that insight into when it's going to happen. But at some point, 7 out of 10, 70% of the time, these upsloping channels break to the downside. Likewise, downsloping channels, all right, when you have something like this, downsloping channels 70% of the time break to the upside. So remember, technical trading and investing is all about probability. And when you look at charts, you want to figure out, well, what's the most probable outcome, positioning your trade or your portfolio in that direction. Okay, so yes, right now you're getting a bounce. That's to be expected. But the idea is at some point, whether it's in the near term or in the midterm, you likely will see another move down where we break this lower channel. And let me just flip that back down so we can monitor it right here. We break it to the downside. And again, my guess is we check back like this, and I think the next wave to the downside is a breakdown there. What would be the most likely target? Well, you see this former pivot before that bigger correction into that channel. That would likely be the target range on the S&P 500. All right, so just going over that because, again, I do think this is very educational, but also very important if you're someone who follows the charts and understands the kind of stuff that I'm speaking to in terms of probabilities. All right, couple other stocks making moves this morning. CrowdStrike is lower again. I myself experienced it this weekend. I was supposed to fly out to Oregon, spend 3 weeks out in Oregon. I was going to do the game plan from out there and everything. Had 2 kids with me, and flight got delayed until we literally would have missed our connection in Atlanta. The person from Delta on the phone said literally the flight was boarding to go to Atlanta, and the person said literally, do not, whatever you do not get on that flight. The idea being is we would have been stuck in Atlanta for days trying to get out of Atlanta, and that would have been a fiasco, especially with 2 little kids. It wouldn't have been fun. So we're back here in studio this week, and then next Saturday I'll be flying out, heading to Oregon to get a little R&R, but also do my full slate of work, all the game plans, all the trading, the closes. Okay, so what do we have here? CrowdStrike again, which is the culprit of this, is trading lower. The question is there a trade here? And the answer is not really, unless you really see a flush. As a day trader, I will be looking at double bottom. Double bottom from basically last Friday. This was actually a pre-market low. But again, if price were to come down into that level, we would have to actually come all the way down to about 270-ish. Then I might be interested as a day trade. Would I be interested in a swing trade on this? The answer is probably not yet, because if we flip over to the daily chart, we can see it's broken a big trend line to the upside, and you know there's going to be investigations. There's going to be, the CEO is going to be in front of Congress. All of this stuff is going to be a lot of bad news, and I don't know the outcome of that. So unless you know the outcome, you don't really want to put your money at stake just yet until the probabilities start to align. Now, if we get a major technical correction here, yes, I mean, at a certain point, it's worth a shot. Like if we were to erase this whole move up and come back into this area right here, you can see how it was chopping kind of in this uptrend, slow uptrend right here. This is, by the way, again, just a sideways chop. If we got back into this area below 200, maybe then it's worth a shot. Major technical support, kind of erasing this mega move to the upside. But aside from that, for me, it's a no touch on a swing basis. But remember, swing trading, day trading are 2 separate things. Day trading is very quick. You're in and out for a couple dollars. Swing trading, you're probably looking for 10% or greater. Verizon reported earnings this morning. The stock is lower. They met expectations for earnings per share, but they missed on revenue. And again, the stock is seeing a little bit of a downshift here. If we look at where this closed on Friday, closed right here on Friday, which was around 41.60. It's trading at around 39.96, so about a $1.60 drop on the stock pre-market. And again, for me, if I look at this daily chart, and this is actually something I posted on Verified Investing over the weekend, this is kind of an interesting chart for a couple reasons, right? So if I look at this, the first thing that jumps out to me is that even with this decline, there's a bullish pattern that is still holding on this chart. And one of the patterns, I don't know how many of you guys can see this without me drawing it in, but that's a good test to see if you can see it. But essentially you have this type of pattern, right? All right, so number one, this could be said to be an inverse head and shoulder pattern, which is a bullish pattern. Number two, you could just cut out this side and say that's a cup and a handle, right? Cup and handle pattern. So even with the pullback to 40 right here, you're still right within that range. I wouldn't really want to see this get below 38. 38 would kind of be a line in the sand. But as long as it stays in this range over here, this pattern could still be a potential breakout pattern to the upside. Now, what would be the catalyst for investors wanting to get in Verizon? Because it's not sexy, right? It's not AI. It's not all this other stuff. The answer is very simple. Dividends, right? So as interest rates come down and come down lower and lower, which is what I expect, the dividend that Verizon pays, which is a pretty hefty dividend, starts to look better and better to income related investors, right? So people that are looking for 5-6% interest versus, on a stock, which granted you have risk of it going down, but at least again, at a certain point when yields on the 10-year get so low that it might not be worth it to be in those, you have to look and say, okay, well, where else can I generate that yield? And that could be the end game here, is it might be more of a safety hedge as the economy goes down. The other thing to just point out is that Verizon, where are people, when we go into recession, how many people will cancel their cell phones? And the answer is not very many. There's a few staples in our life that we probably will keep. Those will be the last things that we keep. But I would say that, maybe your car, and obviously your house. Those are the three staples there that people will keep in general. Now, listen, could they maybe not pay their cell phone bill? Yeah, but then it gets shut off. So it's a little bit of a give and take in that scenario. All right, so either way, just a chart to watch. This isn't an entry today, in my opinion. But again, what you're looking for is maybe the right setup down here, or if it breaks this 42.90, 43 level, it does get interesting on a swing trade basis. For me, no day trades today on this setup. All right, one other thing I wanted to keep touch on is number one here as we flip through. So we do have Nvidia bouncing today. I wanted to cover this chart here. If we flip to the pre-market data, you can see it's actually having a very nice move back to 120.65. This is your pre-market move to the upside. But this is important. Like I said at the beginning of the game plan, trends have been broken. Levels have been broken, which means it's a short the rip versus buy the dip. What do I mean by that? Well, if we go to this chart on Nvidia, what do we see? Well, we see an upsloping trend line here. We were going up, pulling back. We kind of hit it. We started here. We hit it once here. We hit it once here, and then broke. So what you're looking at is potentially us trading back up. There's a gap fill right here in this trend line. That would be major resistance around 128. Should we get back to 128, that would indicate the high probability of a drop from there to the next level, probably around $100, maybe even below $100. All right. Now, one other thing I wanted to show you guys. Usually we go into Bitcoin after the break here, after the little midpoint. But today I want to show you something. So if we go to Bitcoin, when did Bitcoin bottom? Bitcoin bottomed on Friday, the 5th of July. Okay, clear as day. That was your low pivot right there. I want to show you something because I think this makes a lot of sense, and it kind of reiterates that there is a money flow going on. We know the Russell rallied massively over the last couple weeks because money was coming out of mega cap and heading into the Russell names, the banks, the regionals, etc. But it was also going into Bitcoin, and I'm going to prove it to you right now. So remember that date, July 5th. Now let's go to Meta. Let's look at Meta here. All right, when did Meta top? All right, if we put our cursor, the last big green up candle on Meta, when was that? Look at that. I don't know if you can read that, but that's the 5th of July was right there. Okay, now let's just, all right, so one mega cap, $1 trillion name. Let's go to Microsoft. Let's see what Microsoft, which is basically the biggest one via market cap. Let's zoom in on this chart. I got some lines there. We can get rid of them. When did Microsoft top? When was the highest point on Microsoft right here before this decline? Right there, the 5th of July. And so look at what's happened to Microsoft to the downside. And what we know about Bitcoin is Bitcoin made that low tail right into support and has rallied up ever since. And so for me, there's a clear correlation here between downward movement in mega cap where money's being pulled out. It's looking for other investments, right? It's looking for small caps, mid caps that are beaten down. It's looking for regional banks and banks. JP Morgan's done really well lately. So has Goldman Sachs. And obviously, Bitcoin is one of those recipients. Now, it's not the only recipient because we see other things rallying, but there's no doubt that money is finding that and going towards it. And I think that's just an interesting point to say that Bitcoin is almost being treated like part of the small cap, mid cap group, even though it's a $1 trillion market cap there. But it is seeing money flow, or at least some money flow, from the money being pulled out of large cap tech. All right, let's do our quick drawing here. Let's see what we have for our winners. So remember last week, guys, what did we have last week? We had smart money commodities, 3 months free. Let's find out who wins that today. And as always, guys, you guys know we love using this wheel of appreciation to show our appreciation for you guys that spend your 20 minutes plus every day with me. and obviously share that. That's our way of giving back. You guys are helping us in amazing ways. So our winner today is Saucy Rossi 3698. Congratulations, buddy, Saucy Rossi. Reach out to support@verifiedinvesting.com to claim your commodities 3-month free service right there. That is very cool. And again, like I say, guys, as follow me over to the wheel here, but basically we're going to be just continuing to do our best to show our appreciation for you guys in terms of everything you do, coming in and supporting us and supporting our mission, which is to even the playing field between retail investors and institution by bringing this kind of technical analysis, which honestly, up until very recently, was something that was exclusive to the billion-dollar funds out there. You look at these hedge funds, that's what they use. That's what they're using. All right, so anyways, let's roll this. Oh, nice. Oh, almost. Smart money commodities landed again. What do you guys think? Should we spin it again? Let's spin it one more time. It was almost the winning trader series. That's cool right there. That's a great one right here. Dr. B's 1-minute scalpel, guys. And this course, again, I've seen so many, by the way, with the sale going on right now. It's our last sale for these type of things, these courses. Again, I've talked to you guys about how I don't like sales because it causes people to say, oh, well, I'll just wait for like the Black Friday sale. It's like, no, you're literally costing yourself tens of thousands of dollars potentially by waiting to learn this stuff. So as I said, this is the last sale that we'll be doing for these courses here. And this one, Dr. B, is $100 off. It's basically 33% off. Incredible in terms of learning how to trade the 1 minute. And the 1 minute gives you so much versatility because it allows you, once you learn this technique, you can actually apply it to other time frames as well. So really, really important, guys. And we'll be giving away this course tomorrow. All you have to do is share this on one of your socials, post it below on Verified Investing's YouTube or Twitter where you shared it, and then obviously make sure you're following us on the socials. All right, guys, we'll give that away. On that note, one more player that I want to thank, Lux Algo, guys. We're just about to launch our Lux Algo indicator, folks. Topping, bottoming, tail figure. It's basically alerts you to any topping and bottoming signal, reversal signals in any charts out there. It is incredible. And again, it's not launched yet from what I know, but hopefully by the end of the week or early next week it will be. And it is my gift. I want you guys to be able to use this type of stuff because it is incredible. All right. On that note, guys, here's a quick 30-second message from Lux Algo.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, we are back, guys. Right into Bitcoin we go. I know we touched on Bitcoin before, but I didn't get to go over the levels. So right now, you've had this amazing move up. I just showed you in the prior segment how at the lows, that's when mega caps were at their highs. As mega caps have sold off, this has gone up. Look at how we're seeing a little bit of selling in Bitcoin today as mega caps are bouncing. Just something to follow. Either way, you have a clear trend line from this high right up here to this high right here, and a flat line right here. This is your zone between 70 and 72,000. That is your key zone of resistance. Should we get through that, obviously the all-time high is just below 74,000. But ultimately, again, if you even get through this area right here, I got to believe we're making new all-time highs. So very nice movement. I still think you're due for a pullback here. The question is where? Maybe back to here, somewhere in this area of a little check back. But either way, your low pivot down here has held beautifully around 52,000. We didn't get quite as low. I was thinking we might even touch 50 to 49, but 52.5 was my key level, just ahead of that level. But ultimately, again, great showing on Bitcoin recently. The question is, will it last? And Ethereum, to be honest, and I haven't looked at Ethereum in a while, but let's take a look right now. Ethereum, to me, it's a little bit on the weaker side. They're launching, I think, 5 ETFs this week, so we'll have a lot of ETFs to trade as stock traders in our portfolios if we want. But again, I'm not super thrilled with the price action. I do think there might be a little hesitation, as remember when the Bitcoin ETF launched, there was this grayscale mass dumping that actually caused Bitcoin's price to drop 20% before it stabilized. And it was all a fees type of thing, rotation out of that into these other ETFs. And so I could see investors in Ethereum being a little nervous about buying more Ethereum going into that, not knowing if Grayscale will see that exodus like Bitcoin did. All right. Next up, let's take a look quickly at gold here. Gold had that beautiful sell-off on Friday, folks. Beautiful sell-off. Just look at this right here. We had our pivot top to pivot top. It actually literally to the penny right there. It's then seen a pullback here. You have an upsloping trend line right here, So first support is going to be around 23.70 to 80, right in this vicinity. If it gets through that, this is going to be a major level here on gold at around 2,300 or just below 2,300. You need to see gold, really, to be honest, gold needs to hold this 2,300, 2,290 area. It's still well above that, but this bullish consolidation pattern, you really do want to see it eventually break to the upside. I do remain very, very bullish, though, on gold, even with this little pullback here. Silver's another one, guys. I mean, this has been pretty remarkable in terms of the selling, but silver is into a very key level. Look at this. You have your baseline right here, which is right here, and your downsloping channel. Look at this beautiful channel. All these highs right along here, all these lows right along here. And then we broke out, and now we've retraced to what I call the scene of the crime. So there should be massive support on silver right here. It's already bouncing a little bit off of this level, but this is, to me, a good starting point to start to nibble a little bit. But understand that if it does break here, it could go all the way down there. So you don't want to go all in. Like for me, I did nibble a little bit here, but I'm leaving myself the possibility that if it does break technical support, it could dump out to somewhere in the 26 to 26.50 range. Now, some amazing charts, folks. Ready for this? Take a look at oil. Oil is dumping again. Now, you can't say that if you've watched the game plan for the last, I would say, month, that I didn't literally guide you guys to the exact high that was going to be put in right here. I said, all right, guys, you have X marks the spot, multiple trend lines, overbought. I even told you hedge funds were over short down here, so that covering was going to drive it up. And then I said, guys, once this hits, it's downtown. We're going downtown here. This is going to fall, and it should continue. You have a little bit of support around 78 right there, that little shelf, but ultimately you're looking at 74 as being your next support level. But that is an awesome example of the power of technical analysis. You know what else is a great example of technical analysis and the power? Take a look at natural gas. And if we flip over to natural gas, here it is, folks. We are in the money on these trades as well. Smart money commodities, smart money stocks. Beautiful drop. Had the levels right down here, and then look at that bounce starting to come in. And listen, they call it the Widowmaker for a reason. You have to start small because it can do some crazy things. But this is picture perfect in terms of technical levels of where we talked about it finding major support, and it is getting a bounce. Now, how high could the bounce go? We talked about this prior. This would be my max upside. I don't know if it'll get there, but this would kind of be maximum. This would be the middle point of the M pattern, which is usually what happens. When you form the A on an MA pattern, it goes right up into this zone here before it pulls back. So that would be my short-term upside target on natural gas. All right, guys, let's break it down. So when all is said and done, I'm here to guide you guys. I'm going to do my best to give you everything I know, everything up in here to you guys, because you guys support me and Verified Investing. I will do my best to support you guys. But thank you so much. Don't forget, check out this sale here at Verified Investing for these courses. Last one, it ends, I think, on the 31st of the month. It's an amazing deal to get amazing amounts of knowledge and step your game up to where you can compete and even beat the institutions at their own game. And that's what we all have to do. They have so much money, but if we have the same knowledge, we can be little bit in here grabbing money left and right. And to us, that's big money, right? I mean, yeah, we're not going to make, I personally, I'm just going to speak for myself, I'm not going to make billions and billions of dollars trading, but can I make millions? Yes. Each of you guys can make thousands, hundreds of thousands, even millions yourself. It's all about learning the games, learning the technicals, learning the charts, and finding the probabilities. You guys have a great rest of your day. I will talk to you later at Trading the Close. Take care.